The first 5 days of the August contract between gold and silver, almost $15 billion worth of stuff was delivered in 5 days. Now, it's much more than that now. This was 2 weeks ago, but it almost all left. Where is it going? Who's buying it? Why do we not know about it? That to me signals the people doing this are very wealthy, very sophisticated, know what the hell they're doing, and they wouldn't be doing this if they didn't see where we're going with our fiscal and monetary policy and ultimately where gold and silver are going. So yes, I'm sorry to have belabored the question, which could have been answered much more easily, but yes, this will be very bullish for gold. Very, very bullish, as is the underlying fundamentals right now. Here are the numbers for silver for the first 5 days as well. So this would have been August 1st, 4th, 5th, 6th, and 7th. So they received into COMEX 1,721,192.54 ounces. That was delivered into COMEX, right? 1.721192. You know how much was withdrawn, left the exchange? 1,890,316 ounces, more left than was received. And so that's one thing, but the 1-to-1 ratio you're talking about of not rolling when they post, standing for delivery, no, there's no way it'll be 100 because it's typically 1% or, in that vicinity. To see it at 100% is, right. It's 4 feet of snow in Death Valley in July. This is very unusual stuff.
But even if it's 4 to 5% for the month, I imagine that is still very, diverged from what we normally see, correct?
Yeah, I mean, the moral of the story is not only are we seeing, players keep a lot of metal there because lots of deliveries are coming in and the numbers are going up, but they're withdrawing a massive amount of metals out of the vaults, and that in and of itself is, I think, really incredible. I mean, that's whipped cream on top of an unusual Sunday. Because it's like these things just have never happened before, and now they are. So what does it mean, and who's doing it? Who's behind it?
Where do you think this is going? I guess maybe do you think it's going into the Fort Knoxes of the world if you think it's a sovereign buyer that's behind a lot of it?
If I have a thesis, I believe, if I had one guess, I would guess it's Secretary Bessent under the auspice of the Exchange Stabilization Fund, where because it would be used for American security, he would not even have to run it by Congress, or at least in a very disclosed way, because I don't know, I guess who else could it be? Buffett, Bezos, a huge hedge fund. They're talking $100+ billion. Where is it going? And if you think about it, for those of you that own a mint box of silver, 42 pounds, $19,000 worth of silver, well, what are you doing with $7 billion worth of silver?
What's I was going to say, this is a lot of mass.
You're talking semi-trailers full of it. Yeah. So I don't know where it's going. It's going to some people that are incredibly influential. And that in and of itself is also interesting in that, how do you keep this quiet? Quiet to the point that none of the mainstream media even mentions the fact that you're seeing record inflows, more so than at any time since the Bretton Woods Agreement, where everyone sent us their gold. Record. This should be talked about. It's not, and the fact that it's not, and even I spend 3 to 4 hours a day, every day, 7 days a week, reading everything I can find across the globe, and no one has a clue who's taken possession of this. This is at a high level.
What is the risk here, if any, of a breaking of the COMEX or a breaking of the LBMA under this demand?
I think the risk of breaking of the LBMA is far greater than breaking of the COMEX, because all of this gold is now coming into the United States, it seems, and I really do believe that, honest to God, believe with the passage of the Genius Act, we have entered a new monetary system, and gold will be the anchor to it, and it's not going to leave the United States. We're going to vacuum over as much as we can. It's not about tariffs, and it's not about arbitrage, like a lot of the talking heads have said all along. And I said, no, it is not. This is far more significant. The LBMA is already showing signs of breaking. You have the guy. I could scour through 50 pages of notes on here and find his actual name. I'll see if I can do it as I'm talking about it. But he used to run ICBC Bank in China. He's Japanese. He's the head of the Japanese commodity exchange, and he just came out and said that the LBMA, he said loco, meaning location, London and Zurich have no platinum, zero. Virtually nothing, yet they're trading 3 million ounces a day of spot contracts that could be delivered. We've talked about silver. Silver has the LBMA has 155 million ounces of silver there. It's the lowest float that they've ever had in the history of the LBMA. Now, a float means the amount of silver backing the contracts. They have somewhere just shy of 750, 800 million ounces altogether, of which SLV owns 80% of it. So, I mean, it's owned by the ETFs, supposedly. That 155 million ounces, David Jensen is a man who has a Substack. I would have him on your show. I want to get him on mine. He's awesome. And he talks about the LBMA numbers. He says they trade about 190 million ounces a day off of a 155 million ounce float. Well, what could possibly go wrong? Well, it gets even worse than that. He says that they did a survey, the LBMA and the member bullion banks did a survey a few years ago where they said, yeah, those numbers are massively understated by as much as 10 times because they only post the final settlement numbers, not all the trades throughout the day. So they're doing 10 times as many trades as just the final settlement numbers. So what he says is they're trading 1.9 billion with a B ounces of silver per day, every day, off of a 155 million ounce float. Now, if we take a step back, and it's very similar with platinum and very similar with gold. Not as bad with gold, maybe worse with platinum. And when you look at what the Bank of England said earlier this year, we're a T+1 exchange, the LBMA. T is trade day Monday, +1 Tuesday. Wednesday, those bars need to be moving too. So, Adam Taggart owns a multinational jewelry fabricating company, and you have contracts at the LBMA, so you can make your gold and silver jewelry. And okay, we need to make stuff this month, so you trade in your contract. They say, Adam, sorry, brother. I know you're expecting those bars moving to you in 3 days, but we here at the Bank of England have a shortage of manpower and trucks. It's 8-week delay. Really? That's what you get. That's what you call getting caught with your pants down.
In the first 5 days of August alone, over $15 billion worth of gold and silver was delivered off the exchanges. Let that sink in. That's not small investors stacking a few coins. That's whales, sovereign buyers, and institutions moving metal in quantities that shake the system. And the big question is, where is it all going? Who has the power and strategy to vacuum up billions in physical metal so quickly? This isn't Reddit traders. It's not Elon Musk or Warren Buffett dabbling. We're talking moves that only governments and central banks can make, and they're doing it quietly, without headlines. The media won't talk about it. Financial outlets look the other way. CNBC can spend hours hyping Bitcoin ETFs. But when it comes to a record $15 billion exodus of precious metals, silence. Why? Because the people behind these purchases don't want attention. Here are the numbers. In those 5 days, COMEX received about 1.7 million ounces of silver, but nearly 1.9 million ounces left. More metal out than in. That doesn't happen under normal conditions. Usually deliveries are rolled over, balances stay stable. But this time, the metal is leaving the vaults. That's not routine. That's historic. My take? It points to the U.S. Treasury's Exchange Stabilization Fund. If it's classified under national security, they don't need congressional approval. They can hoard gold and silver without anyone knowing. Because who else could it be? Not Bezos, not Buffett, not hedge funds. Only sovereign entities operate like this. And remember, last year central banks bought more gold than in any year since Bretton Woods. To put it in perspective, a mint box of silver weighs 42 pounds and costs about $18,000 to $19,000 today. Now scale that up to billions of dollars. That's not a few pallets. That's entire vaults emptied. That's cargo planes packed with silver. People say silver is too bulky to move, but when the stakes are this high, it moves. Meanwhile, the LBMA's silver float has collapsed to just 155 million ounces, the lowest in its 140-year history. Yet they're still trading multiples of that every single day. Analysts say the leverage is up to 10 times higher than reported. That's not a market. That's a casino running on IOUs. And now buyers aren't leaving the metal in the system. They're taking delivery and pulling it out completely. That's the endgame. When the Bank of England recently admitted they couldn't meet settlement times and blamed it on a shortage of trucks, it told you everything. That's not logistics. That's a shortage. That's scrambling to cover. So here's my question to you. Is this $15 billion surge the start of a monetary reset, or just a warning shot before something even bigger breaks?
The Fed were to cut rates to help growth. As you know, we saw the unemployment numbers, the revision of the unemployment numbers were horrendous. And it's funny too, because when the May and June numbers came out, like 250, 60, 70,000 jobs created each month. Gold went down, the stock market went up, and then quietly in August they say, no, not the 400,000 or 500,000 that we thought we created. It's actually only about 78,000. I mean, it's something like that. It was a massive reduction. So you're beginning to see the economy really slow down and layoffs happen. So arguably, this is what they're going to want to do. But this adds more fuel to the inflation side, especially with M2 already at a record. M2 is taken off. So when you have this happen, more inflation without boosting productivity, because I say that to you because we see the velocity of money at all-time lows. So it's like pushing on a string. They're trying to get all this money into the system, but the economy is slowing. You can see it through the unemployment numbers. You can see it through the lack of velocity. There's a massive disconnection between the equity market and Main Street. Ultimately, this is all very positive for gold. Very, very positive for gold, because you're talking about an environment where gold doesn't just go up because of the currency debasement. It goes up because almost everything else looks worse. That's just the truth of it. And you add fuel to the fire when you say, since June 1st, the institutionals, the insiders, right, the traders, they've been selling between 2 and 4 billion a week in stock. And you have all of the insiders that are selling at a 7-to-1 clip. And you have Jeff Bezos selling $6 billion in Amazon since June 1st. You have the 3 or 4 biggest shareholders and board members of NVIDIA doing the same thing, and Buffett with $500 billion in cash. At the same time, you have the mainstream, or you have the public, mainstream, mom, pa, all-time record in equities, all-time record in margin debt, all-time record in option exposure. You're talking all-time levered, risky, all-in and stocks greater than the great financial crisis, greater than the dot-com bubble, and the insiders are going the opposite way. Now, to your original question. So that tells me the insiders are saying, we're leaving the sinking ship right now, something's coming, and the public is the opposite, all in. But on the metal side of things, the public doesn't have much exposure at all. But what we have been seeing month over month is extraordinary. Extraordinary in the amount of gold that's coming into this country. The people who are incredibly sophisticated know what's happening. And I want to draw an analogy to say these people typically know what's coming before the rest of us do. They are able to get the playbook. And if you look at the fact that my whole career, which will be 36 years this February, less than 1% of COMEX contracts ever stood for delivery. Now, all of the gold that's coming into COMEX, what we know of, over 100 billion since the beginning of the year. And I would argue that a whole bunch more is coming in, not through COMEX. The biggest money in the world is importing gold in the United States at a level that no one has ever seen before. But more crazy than that, and I think this is a bigger indictment, and actually you got to wonder where the hell's it going and who's doing it, who's the big buyer. I think it's the Treasury, myself, or the Fed.
Now, let's widen the lens. When we're talking about billions of dollars in precious metals moving quietly through the system, this isn't just a market story. It's a geopolitical story. It's about sovereignty. It's about nations hedging against the end of an era. You can almost feel the clock ticking on the Western system. Why would the U.S. Treasury, or any sovereign nation, be scooping up this much metal? The answer is simple. Because they know the Genius Act marked a pivot. Tucked away in the headlines, it quietly created the framework for a new monetary system with gold as the anchor. Washington understands the dollar as it exists today is wobbling. Foreign central banks have already dumped hundreds of billions in treasuries. BRICS nations are settling trade in local currencies. And when the tide goes out, the only way to restore trust will be to bring gold back into the system. Why else would the U.S. be vacuuming gold and silver into its vaults? This isn't for show. They're building reserves for what comes next. And what comes next isn't tariffs or arbitrage, it's monetary realignment. Meanwhile, the LBMA is staggering. Silver isn't the only problem. Platinum has already been exposed. No inventory, yet millions of ounces traded daily. Gold inventories are shrinking and the excuses are getting thin. We don't have enough trucks to move bars. That's not logistics. That's insolvency disguised as bureaucracy. That's kicking the can down the road. Look at the numbers. The LBMA has about 155 million ounces of silver float, but they're trading 1.9 billion ounces a day. That's a leverage ratio that would make Wall Street blush. Even the LBMA's own survey admitted public numbers understate actual trades by a factor of 10. They're playing musical chairs with 155 million ounces, while billions of contracts circle the chairs. When the music stops, someone is left without a seat. And this time, it won't just be retail, it'll be sovereign nations. China and Russia aren't waiting. China has been buying gold month after month. Central banks globally logged their highest gold purchases on record in 2023 and 2024. Poland bought, Hungary bought, the Czech Republic bought. Across the global south, countries are diversifying into gold because they see de-dollarization happening in real time. US treasuries are no longer the safe haven they once were. And Russia? They're not just buying gold, they're hoarding silver. As the 8th largest producer, they're expected to mine 1,400 tons in 2025. But instead of selling, they're diverting it, stockpiling for the military, for industry, for reserves. Supply is being pulled off the market before it even reaches global exchanges. That intensifies the squeeze. Here's the kicker. Silver isn't Basel III compliant like gold, but it is a deliverable foreign exchange cross. You can trade silver against dollars, euros, and yuan. And as more silver is priced outside London's control, on Shanghai, on Indian exchanges, through direct miner-to-consumer deals, the old London benchmark breaks down. Power is shifting east. Price discovery is shifting east. The West pretends it's business as usual, but the illusion is cracking. Every contract that stands for delivery and leaves the vault weakens the facade. Every sovereign buyer that drains the LBMA pushes the clock closer to midnight. So what does this mean for you? It means you're early. You're Noah building the ark while the neighbors laugh. They ask why you're stacking shiny rocks while the S&P is soaring. But when the rain comes, when the music stops, when the vault doors slam shut, who's laughing then? I believe this revaluation is already underway. Quietly, stealthily. Call it a shadow reset. The US may already be preparing for a gold-backed element in the next monetary system. If that's true, gold's role isn't optional. It's inevitable, and silver, as always, will follow with leverage. History tells us the natural gold-to-silver ratio is about 15 to 1. Today, it's closer to 80 to 1. That's a rubber band stretched to breaking. When it snaps, it won't drift back to 70 or 60. It will ricochet toward 15. And when it does, silver won't just be a monetary metal, it will be the monetary metal of the middle class. Remember, historically, gold was the rich man's money. Silver was the people's money. The crime of 1873 demonetized silver and robbed the middle class to protect the gold elite. Don't be surprised if, when this system collapses, silver forms the foundation of the rebuild. Silver will circulate. Silver will restore local trade. Silver will be revalued not just against the dollar, but against gold itself. Silver under $40 is unsustainable. Adjusted for real inflation, it would need to be above $200 to match its 1980 high. Could we see that? Absolutely. Could it happen faster than people expect? Without question, silver doesn't move gradually. When it runs, it rockets. It went from $9 to $49 in under 3 years last time. This time, with deficits baked in, industrial demand surging, and inventories gutted, the rocket fuel is already there. Yes, there are above-ground stockpiles. India has reserves. Recycling exists. But those stockpiles are fragmented. They're in sovereign hands, private vaults, or locked in industrial uses. They're not waiting to flood COMEX. If inventories are so plentiful, why are vaults being drained? Why are ETFs like SLV losing ounces month after month? Why is industrial demand in record deficit year after year? Because the silver deficit is real, and inventories are not infinite. At some point, the cupboard is bare, and when that day comes, only price will ration demand. COMEX itself likely won't break. It's owned by its participants, and they'll cash settle before they default. They'll change the rules like they did with nickel and tin. But the LBMA, that's the weak link. That's where the float is thinnest. That's where leverage is insane. That's where sovereign withdrawals can tip the balance. A T plus 8-week settlement isn't credibility. It's desperation, and the world knows it. Meanwhile, BRICS are building alternatives. Russia has floated a gold-backed trade currency. China has the Shanghai Gold Exchange, where every contract is physically backed one-to-one. No games, no paper multiples. If you buy an ounce, there's an ounce. That builds credibility. That builds trust. That's why metal is flowing east. The irony is painful. The West suppresses gold and silver to prop up a failing fiat system. The East buys at those suppressed prices. And when the reset comes, the East will own the money, and the West will be left with paper promises. This is the largest wealth transfer in history, happening in plain sight. So where does it end? It ends with revaluation. Whether it's a deliberate reset or a market crack, gold and silver will rise far beyond today's levels. And those holding real metal now will not only preserve wealth, they'll be witnesses to history. Now let me leave you with a question. Do you think this massive shift is the beginning of a full monetary reset, or just the early tremors before something even bigger? Yes, this is the reset in motion. No, it's just a temporary squeeze. Maybe, but it's bigger than anyone realizes. Not sure. I need more signs. Drop your answer in the comments below because your voice matters in this conversation. And remember, if you don't hold it, you don't own it. Stay sharp, stay prepared, and keep stacking.